cam, so you will be seeing my face. I'll be chat. So without wasting much of our time, let's go back. Let's dive into today's topic. So today we are talking about how I personally analyze gold. Like you can see, this was the trade I took yesterday. So this was the trade I took yesterday. After the analysis, the market was not here as at the time I did this analysis. So you can see the trade was a profit. It was a 1:2. I cut out from here 1:2. Yeah, I took my profit from 1:2. So I was out of the market because I trade once a day. So all this move, I didn't catch it. It happened I think it happened late at night or so. So now looking at the market now, what I use to analyze the market is just a simple thing, the normal simple thing we all know, which is trend line. Yeah, trend line. Yeah, a lot of people say trend line is one of the, like, trend line is old. People feel trend line does not work. Trend line works. Yeah, it works. It depends on how you use trend line, how you personally use it. You understand? Trend line is, but the trend line is not actually my major confluence of entering my trade. I only use trend line to know the direction of the market. Yeah, I repeat myself again. I use trend line to know the direction of the market. So most time when I'm taking my trade, I always want to see the trend line in my direction. Then you see me taking trade in the direction of my trend. Yeah, so that's what I use. Then the next thing I would like to look at for again is swing zones. I call it swing zones. Yeah, swing zones. And this swing zone is only taken from H1. Swing zone H1. So this swing zone, I only take swing points from H1. Swing zone is just, it means turning points. There are turning points in the market where the market turns, like where you get a turning point in the market. Let me show you an example of swing zone. This is a swing zone here. You can see this market pulled back on, okay, this 15 minutes. Let me use the 15 minutes to show you. Pulls back, you can see a turning point. This is a swing zone. This is a swing zone. This is a swing zone. So if I'm looking for buys, I wait for market to drop down to my swing zone. Do you understand? It drops down to my swing zone. If I'm looking for sell, you can see I wait for the market again to drop down to, this is a swing zone. This is a swing zone. A bearish swing zone. This is bearish swing zone. So I wait for market to pull to my swing zone. You can see this one pull to swing zone, it drops. This one pull to a swing zone, it drops. This one to pulls to a swing zone, it drops. So that's actually how I trade gold. I use swing zones and bullish swing zones for buys. Like this, a bullish swing zone. The market tapped into this swing zone, it bought. So this is a bullish swing zone. So if I'm looking for sell, I look for what? Bearish swing zone. You understand? So swing zones is one of the confluence. Then another thing I look for again is order block. Yeah, order block. This strategy is combination of SMC, a little bit of SMC and trend line. You understand? So this is just my strategy. This is the way I trade. It's a mixture of SMC with my trend line. So it's more like an SMC strategy. So I look for order block. Sorry, before the order block itself, I look for liquidity. The next thing I want to see inducement, which is also called inducement. Most time when you see my setup, you see ID. That ID means inducement, like this. You can see this now. This is an ID. This is also inducement. This is inducement, which means liquidity. I love seeing liquidity. And this inducement, I love seeing it on 15 minutes. See, I have time frames where I do my things. I love seeing my inducement on 15-minute time frame. 15-minute time frame. Man, this thing I'm giving out, it's a paid something, oh, but I just want to give it out on YouTube for free. Okay, so if you really want to get a deeper knowledge about it, get to learn one-on-one or via online, you can hit me up. So before we continue, please try to subscribe so you can keep getting more content, so you can get more content about how I trade gold, and so you at least you can use that to develop yourself. So the next thing I look for what is order block. So this is what we call order block. This is the way I define my order block. Order block are turning points. In my swing points, the last, if I'm looking for a buy, like if I'm looking for buy, the last bearish candle before the bullish momentum, before the bullish momentum, like before the market start going up, is my order block. Do you understand? Like, let's look at this, the one I took yesterday. You can see this is my order block. These are the red. This is the last red candle, or a black candle, because I use black and gold. This is the last bearish candle. The black candle is my bearish candle. This is the last black candle. So this black candle here is the last one on 15 minutes. You understand? You can refine it to any time frame you want. I refine this. I refine from 1 hour, 15 minutes, and 5 minutes. So to get to know how to refine, I think that one is something that is a special topic on its own. So you if the zone is too big on 15 minutes, you go to 5 minutes to look for the zone. So this is my order block. So you can see there's a liquidity on 15 minutes. This is 15 minutes. You can see there's a liquidity which I marked out, and you can see immediately the market clears out this liquidity. What do you see? It taps in and you start buying. Do you understand? So this is just the things I use in trading. You understand? These are just what I personally look out for. I hate complexity. I don't like complicating anything. I like making my things simple and easy. You understand? So this is just what I watch out for in every market. I watch out for trend line. I watch out for swing zones on 1 hour. I watch out for inducements on 15 minutes. I watch out for order block. So now, I think I've actually made analysis on this chart. So let me use a different chart so I can analyze the market. I can analyze the market on how to trade. And I think maybe later in the next topic or any other time I'm able to create another content. What I'll do, I'll create a top-down analysis, because there's a top-down analysis on this. There's a top-down analysis which you start from the daily down to the 15 minute or 5 minute time frame. So but to make everything short and quick, so let's use this. So looking at this now, you can see now you can see this is a clean chart. I want to analyze this. I want everybody to see how I analyze gold. Looking at this now, you can see this is a clean chart. There's nothing on this chart. So what do? I actually want to identify my trend by going. Let me use the higher time frame, which is 1 hour. In fact, let me start from the 4 hours. So I want to know the trend of the market. This analysis here. Let me delete this. I've used this chart. So now I want to start from the daily. So you have to shrink, zoom in, or will I say zoom out? It's kind of confusing. Okay, let's zoom. Let's shrink the chart. Okay, let's say looking at this down. This is a bullish market. So what do we do on the 4 hours? You connect your trend line. You can see connecting my trend line. This is what I got. Let me make this trend line to be clearer. Okay, so you can see, so trend line where you see 2 to 3 touches, that's your trend line. So you can see there's a swing point here. The market broke the structure, came back here. This and that swing point, so you connect it. So this is my trend line of 4 hours. So let me come to 1 hour. Mind you, the last I don't draw my trend line on 15 minutes. I think I'm giving out a lot of things on this video. I don't draw my trend line on 1 hour. Yeah, my trend line, sorry, on 15 minutes. My trend line stops on 1 hour. So this is my trend line. if I should actually want to look at this, there's a tiny trend line coming from here. So trend line, you start from where you stopped. This under trend here, just a mini trend line, mini. Sometimes I might not use something like this, but if you look at the 4 hours and the 1 hour trend line, I think the both of them are aligning, so it's fine. Let me go to the 1 hour to see it clearer, 15 minutes to see it clearer. The network is hello guys, sorry, the network was actually bad. So you can see now looking at this trend line now, you see that this is actually the trend line we drew on 1 hour. So look at how it looks on 15 minutes. You can see, so I can adjust it here on 15 minutes so it will fit in very well. So this is it. So you can see we still have a good trend line here. So now what is the next step? You know, the other thing I said we look at what? Trend line. So this is trend line. So what's the next thing? What's the next thing? We look at trend line. Okay, the next thing is what? Swing points. Let me copy this. Let me copy this and bring it to this side.
Mr. Innocent, are you alive now? I do. Are you alive now? I tell you alive, bro.
So you can see, so the next thing we look for is what? We look for swing points. So now the swing points, I told you, I said you only get this swing point from 1 hour. So you can see, coming to the 1 hour now, you can see you have to know how to read your structure, which is key. So you can see market did what? Market was a bit bearish here. Market failed to take out this level here. So you can see the market took out this level. It broke structure here. Some other people, the SMC people, they like marking things like this. They will write something like BOS. Yeah, you can do this also. You can do this. You can do it, but I actually don't. I prefer working clean. Like some people do this break of structure. They clone it again, take it to the next place. You can see there's a break of structure here, so you can identify the break of, how to 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 identify the break of structure with my naked eye. So most time I don't see needs for using this. So if you know you're a beginner and you still can't identify things with your naked eye, you can do this. So this is a break of structure. Do you understand? So this is a break of structure. This is a break of structure. So I only identify my break of structure on 1 hour. Put this on your score on 1 hour, please. On 1 hour, I don't use 15 minutes for my break of structure. I only use 15 minutes to find liquidity and refine my order block. So you can see when you come to the 1 hour here, let me make it big. You can see there's also a break of structure here on 1 hour. So seeing this break of structure here, so what is the origin that led to this break of structure on 1 hour? So looking at the origin, this is the origin here, this red candle. So what do? That is the swing point, which takes us to the next thing, which is what? The swing point. Let's go back to the other chart. I don't want to keep typing. You can see, so we've identified trend, swing point on 1 hour. Now the next thing is inducement. So now let me show you the swing point. So this is the swing point here. Let's go back. So this is the swing point. This is identify our swing point. This is the swing point here. You understand? This is the swing, the bearish swing that 1 hour structure. So now you can see I told you we look for what? Inducement. So before I look for inducement, I need to refine this point of interest, which is the box I drew now. So I have to go back to 15 minutes for refining. So the last red candle before the move, before this bullish move, is my order block. This is the order block here. This is the order block. Do you understand? On 15 minutes. So you can see that is identify my inducement, 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 my inducement on 15 minutes. So inducement are those swing that the market printed on 15 minutes. You know, we use our break to look for our break of structure. So my inducement, I will search. Let me take away this trend line. I think I don't need it. So my inducement minute on 15 minutes. So these are my inducement. These are my inducement, which is liquidity. So I have liquidity. This is a trend line liquidity here. Trend line liquidity. So this is how I like my liquidity bus to look like. My liquidity look like this. So I write IND. So which means IND stands for inducement. It stands for inducement. So this is my inducement line. This is my inducement line. So you get. So once market clear all these inducements, like the whole liquidity, I expect market to tap in here and start going to the upside. But now looking at this clearly very well, you see that this order block here has been mitigated. What do I mean by mitigation or mitigated? Mitigation means when a candle has tapped into an order block, so that order block is already used. When an order block is used, most time I don't use it, but sometimes you can see me use it. Yeah, because sometimes the only reason why you can see me use this, sometimes maybe you can see market has really pushed up very well, so, and this is just a mitigation, and it was not really deep into it. Let's assume the market has come into it very well, I might not use it. So but the best thing to do is, which is actually the one I'm using on the other charts, this is what I'm waiting for. So since market is backed into this box, I think my conf level here and this level here has dropped because of this mitigation. I'm seeing here. So the next thing I do is to move to 5 minutes to see if I can get any other blocks. So on 5 minutes, you can see there's a swing point here, which is still within the 1 hour swing level. So this is the last candle the last bearish candle before the move. So now we have a clear liquidity level here, which is inducement, which is also called inducement. So now let's go back to 15 minutes. So you can see now, this is what I'm watching out for today. If this happened today, I'm taking my trade. If this happened today, I'll be taking my trade. So now what I'm looking for now is for this market to come down all the way and tap into this box, then I'm buying. So let me bring out my short and long bars. This my long, because we are looking for long. So I'll be waiting for this market to come all the way in. So I love using 50 pips. So since I want to use 50 pips, I might want it to come deeper. So I can stay below. So I can at the same time raise the same 50 pips. Like this is the only way I can raise 50 pips, because I need to stay below the structure. I really want to stay below the structure. So this is the only way I can. If the market drops in deep to this level, to this line here, I think I'll be buying. I'll be buying at this level. But if I want to take entry, because sometimes this market might just drop without getting to this line. Yeah, it might drop without getting to this line. Sometimes it might just drop, a shallow drop, maybe something like this, and start going back. Like drop from here to this level here and start going back up. So if you want to take the high risk, the safer one, you wait for you just put your bus line. Once the market drops in, your stop loss will be below the line. So you'll be risking 100 pips on this chart, 100 pips on gold, which is not bad, and as high as this. So you are still getting your 1-3. This still gave me 1-3. If this market should comes in and drop here, if I should take these pips, 100 pips, and I'll be targeting 300 pips. But if I want to risk 50 pips, I have to wait for the market to come deeper, at least something like this. Then my stop loss a bit close. inside the ball itself, which is very risky. So with this now I can risk 50 pips, or so if we are risking 50 pips, I'm taking 1 to 6. So you see, this is actually how I analyze gold personally. So there's nothing much complication, straightforward, simple, straight to the point, straight to the like it's nothing like look, I don't use fair value gaps. I don't use fair value gaps. Yeah, this is a fair value gap here. This is what we call fair this. So I don't use fair value gap. So guys, this is just how TGFX analyze gold, and I've analyzed today's chart. I use Onda. So on my main chart, this is actually what you can see. This is actually what I'm waiting for. So once the candlestick drops here, I'll be buying. So that's it. This is the trade we took yesterday. So let me see if my Telegram will open so I can show you some of the trade, because I just passed my phase 1 on Marvin, and one of my students also passed his phase 1 on Marvin also, which I will be putting it on YouTube Shorts for those that are not believing, for the unbelievers to see. Because a lot of people reach out to me, teach me forex, and I was okay, pay just 50,000 naira so we can start. So they will just tell me, okay, they expect me to pour out knowledge for free, which is, you want me to teach you one-on-one, like you'll be taking my time and you don't want to pay, which is very wrong. So those that know they can't afford the 50,000 naira, because I'm a Nigerian, it's just naira in Nigeria, which is less than $20, I guess. So you can come to YouTube, you can come to my YouTube, subscribe, follow, and you keep getting contents like this whenever I post. Alright, thank you guys. Thank you for your time. Please try and subscribe to this video so you can keep getting content. By subscribing, that's actually where you help me also, and you can also share to your fellow friends, beginners, people who are just coming into the forex industry, who are just looking for a strategy to start up with. They can also actually learn this also. It's more like SMC, but a little different, like I change it. So a recap, if you want to use the strategy, you have to pay attention to your trend line, swing zones on 1 hour, inducement on 15 minutes, and order block. Thank you guys. See you when I post again. Thank you.